LiteFinance, the world of financial freedom.
Hello, it's Monday, 1st of August. Let's start the market forecast. So the week ahead promises to be somewhat interesting, with focus, of course, on non-farm payrolls, PMI data and the OPEC meeting. Apart from that, we'll briefly discuss the situation on the stock market and the US economy, since we got negative GDP reading for the second consecutive quarter, which technically means we are in a recession. But are we really? Okay, let's first check the calendar and then we will go back to this topic. So today we already got some PMI readings which were not so optimistic, especially for Germany and the Eurozone, which are showing a slight contraction. UK data, on the other hand, are just below the previous reading but still showing expansion. Also, China published their PMI showing a slowdown as well. For today, we are still waiting for manufacturing PMI data from the US. On Tuesday, we will get an interest rate decision from the RBA, which again should raise the rates this time for 50 basis points, consensus shows. On Wednesday, we will get a services PMI from the Eurozone, Germany and UK. And the most important event will be the OPEC meeting, where we will get information about planned oil output. Although it is very important, since any significant move like increasing or decreasing output either could potentially collapse the price or shoot it much higher. The current situation is rather stable in a way that we can clearly see that demand is slowly decreasing and OPEC countries theoretically are constantly increasing output, slightly but still. And another problem is that many cartel members are still behind the schedule, and so eventually planned supply from those countries should be available on the market, which means there is still more to come, and there is no reason, in their mind of course, to increase output significantly. On the other hand, the reduction of supply also would rather not happen, since it would be, let's say, politically not welcomed, especially by the US, for example. It could significantly deteriorate already poor relations between the countries. But okay, and next on a Thursday we will get the Bank of England interest rate decision, which, as you probably guessed, most likely will be raised by another 25 basis points. And finally, Friday and NFP data along with labor data from Canada. And so the focus on payrolls will be much bigger this time, since it is one of the not so many signals that, despite technical recession shown by the contraction of GDP, is depicting a different story. And if the reading will be strong, or at least okay, let's say, this would mean the dollar could weaken further from this high on DXY. It is counterintuitive, since the dollar is a safe haven, and if the reading is bad, it means more fear in the market and investors would run towards US bonds, which are denominated in US dollar, and it would mean more demand for the greenback. But okay, as for the recession itself, although we have this negative data, one of the yield curves is negative, signaling that the banks will not borrow money. We have things like Q2 earnings, which are for many companies very good. Last week we got a Visa, Coca-Cola, Amazon, Google, Apple, and all of them beat the expectations. Additionally, data from MasterCard and Visa as well showed that people are spending money. They are traveling, and the transactions volumes are on much higher levels than the pre-pandemic from 2019. Then if we check the S&P 500 and Nasdaq quotes, we can see that as of now, we are not getting a lower levels. Rather, we are making higher high, and soon the price will test the previous resistance. And as we know, stocks are the leading indicator of what will happen in the economy. So as you can see, it is not that bad as many media are showing to us. So with that positive accent, I will end the video now. Thank you guys for watching, and goodbye.